Hey everybody, this is Tom Lee. Hey everybody, this is Tom Nash. And Tom Lee was just on CNBC talking about the rest of 2024, and you won't believe what he said. He absolutely dropped some massive bombshells. Check it out.
Tom, it's weird. We are sitting very near all-time highs, and yet it does feel like there is some nervousness in the market at this point.
I think this coming Wednesday, Becky, will really answer a lot of questions. We're expecting that to be a pretty good report, lower than expected inflation, and I think it's going to help investors get to this place where we can have pretty good growth in the economy. There's some slack in the labor markets, but inflation's falling fast enough for the Fed to actually cut rates this year. And of course, that'd be great for stocks.
Now, look, I'm going to be honest with you. I think a lot of people owe Tom Lee apologies for how they spoke about him in 2023 when they called him the perma-bull, the guy that only has one gear, that is forward, etc., etc. Turns out he was right, and the rest of these so-called experts were wrong. Now, I'm not going to be sitting here pretending like I didn't think that 2023 is going to be a bad year. I did. Tom Lee didn't, and he was very vocal about it when the grain was definitely not in his direction. But nevertheless, he was right, and now he's back on CNBC, rightfully so, leading these sheep into the rest of 2024, trying to explain to them how to invest in this market. Because as you heard, the host, they asked him one simple question. It's like, look, Tom, we're currently at all-time highs. Money is flowing everywhere. There's a lot of euphoria, a lot of excitement, but people are also nervous because people are kind of starting to fear that this might be the beginning of the top. And if this is the beginning of the top, maybe it's a good time to sell. We're actually freaking out because we don't know what we're doing here, but you're the GOAT. Tell us what to do. And I think that was a solid question. I think it kind of depicts quite correctly what's going on right now in the market. You have a lot of the shoe shine boy examples or the old lady in the grocery store. I honestly keep hearing about people who have no business being in the stock market starting to buy Nvidia stock. So I also kind of get that vibe that we're really getting close to this dangerous territory of extreme greed. And Tom Lee was asked exactly that question. Are we close to the top, or is this just the beginning? What should we do? And he basically said one thing. Look, guys, I'm not the oracle. I don't know. But there's one thing I can tell you, which is what happens Wednesday is going to dictate a lot about what happens for the rest of the year. Right now, the market has gone through this very weird situation. We started the market with absolutely extreme optimism. We were certain there's going to be multiple rate hikes up the wazoo. Then we had to pull back to 3 rate hikes. The market didn't like it, but then adjusted it, and now we're optimistic again. So Tom Lee is saying, look, guys, whatever comes out of Wednesday's CPI data, the inflation data that comes out tomorrow, it's going to dictate a lot of how the market looks for the near future. Now, basically what he's telling you is they're saying, look, guys, I believe that the market is going to be reassured after Wednesday. Once the data comes out, and once the data is better than expected, which is what Tom Lee is predicting, then the market will be reassured that we will get 3 rate cuts this year and 5 rate cuts next year, and it's going to keep climbing up. So that is his thesis. He might be right, he might be wrong, but he was very clear about it. He didn't dodge the question. He didn't try to cover both sides. And he absolutely answered the question, which is not something you see often on CNBC lately. Now, he was also talking about the Fed support. Now, they've asked him an excellent question. Credit where credit is due. They've asked him a great question. Great question, CNBC.
Does it matter if the Fed cuts rates or not? If the economy is really strong anyway, will earnings be able to justify the valuations at this point?
And they've asked him, look, Tom, what happens if the Federal Reserve pivots again? And if they go from, hey, we're going to reduce rates real soon to, you know what, we're not going to reduce rates and maybe we will even increase rates. What happens if that actually is the case, right? And that's a great question. And he answered it to perfection. He said, look, guys, there's 3 scenarios here.
I think the Fed being supportive of the economy, so managing the business cycle, is the most important thing. In the last 2 years, the Fed was fighting inflation and therefore hawkish. That was tough for equities. But if we're in a mode where the Fed doesn't know how many cuts it needs to make, but it actually wants to support the business cycle, that's good for stocks. So I don't think you need to have 3 rate cuts. You could even have a good scenario where the Fed only cuts once. But if the Fed's in a position where they feel they need to actually raise interest rates, that'd be bad for stocks.
One scenario is that the Fed starts cutting rates in 2024. If that is the case, the market is going to fly up. Second scenario, if the Fed keeps the rate where it is right now and does not change it for the rest of 2024, the market, the economy is strong enough to still push the market upwards without any rate cuts. But he also said if the Federal Reserve, for God knows what reason, decides to basically pivot again and start increasing rates again, that is going to be catastrophic for the market because right now, every single stock price out there is pricing in 3 rate cuts. The drop to 0 rate cuts might not be that much, but the drop to rate increase is going to be catastrophic. And if that happens, the market is going to crash. Now, that's a fair answer, and I believe it is 100% accurate. Now, then in the middle of the interview, they asked him about the Jamie Dimon letter, which we covered in yesterday's video. Basically saying, look, Jamie Dimon just came out with a 61-page letter, literally saying the opposite, complete opposite of what you're saying about where the market is headed for the rest of this year. You're both optimistic about the rest of the next 5 years, about AI, about technology, and all that, and he shares your enthusiasm. He actually said AI is like the electricity, right? But Jamie Dimon, unlike you, Tom Lee, is saying that the rest of 2024 is going to be horrendous. In fact, he actually said that there's a combination of things that might be even worse than World War III. That's a little bit of an exaggeration, but I get even Jamie Dimon has to clickbait. So basically, they confront them with the Jamie Dimon, aka Jamie Weekend letter.
Hey, Tom, hold on just a moment. We've got some breaking news. We'd actually like to get your reaction, so if you don't mind listening in.
We just have some news literally crossing this moment, which is that Jamie Dimon's JP Morgan is publishing his annual letter to shareholders, pricing in a 70 to 80% chance of a soft landing. But Dimon thinks the odds are, quote, a lot lower. He cites persistent inflationary pressures, including what he says are, quote, ongoing fiscal spending, remilitarization of the world, restructuring of global trade and capital needs of the new green economy.
I think Jamie's doing his shareholders justice because they want to hear from him about all the concerns out there. I think he does a great job of detailing all the things that could go wrong. But at the end of the day, when it comes to markets, I think markets tend to price concerns very quickly. I mean, I think that's really been the concern for the last 2 years is a hard landing. And now that inflationary pressures are easing at a time when consumers don't have a lot of leverage, there's all this, there's $6 trillion of cash on the sidelines. And inflation, we don't really know how quickly it's going to fall, but our bet at Fundstrat is that it's going to fall pretty quickly, means some of the concerns he listed about a hard landing are because of sticky inflation. And if it's softer, I think we're going to have quite a good economy.
Is this a two-pronged outlook on the economy and the markets, though, Tom? Is inflation the one big issue? And if Wednesday proves that it's a hotter than anticipated or hotter than expected CPI number, would you change your ideas about what that means for both of those things for the long term or for the year?
That's right. I think if inflation, because March is going to be the first clean CPI report. We know out of Europe, they've come in pretty soft. They've come in better than expected. If it comes in higher than expected, then I think it raises the question that the inflation is quite stubborn and getting to that from 3 to 2 is going to be difficult. On the other hand, if it is a soft report and we think the probabilities favor below a 0.3, that's consensus core of 0.3, I think it's going to change a lot of people's minds that inflation may not be that stubborn.
Yeah. You have been telling people to buy, or you yourself have been buying on any dips. And by dips, we're not talking 5 or 10% drops. You're talking 2% drops, and you'd be buying into the market?
That's right. I think that there's many reasons that we still think there's gas in the tank in this rally. Part of it is that we do think the inflation trajectory is on a glide path lower than consensus expects. The second is I think there's too much caution out there. When you look at prime brokerage borrowings or basically leverage in the market, it's still below where it was in October 2021. There's still $6 trillion of cash on the sidelines. In our conversations with clients, they're still quite cautious. So as long as investors are top calling and are really looking at the world half empty, I think stocks can still rise on this wall of worry.
And they basically say, well, Tom, what is your stance? And he says one interesting thing, and he alludes to it. He doesn't say it directly. He said, look, guys, you have to understand that he's talking about the risk. Now, what he's saying here, and that's something that he can't say on television, but I can, since I'm a YouTuber, he's saying, look, Jamie Dimon manages a bank. In fact, Jamie Dimon manages the biggest bank in America. His job is to warn you about the worst possible scenario so you prepare for the worst. He's like a lawyer. He's not going to tell you everything is going to be right. He's always going to show you where things can come and surprise you. That is his job, to be more risk averse and more careful. And that is why he tends to be a little bit more bearish than me, since my job is just to make money for myself and my clients. I'm not a bank. And he's 100% on point. But then he adds another very smart observation, and I'm sorry for creaming here Tom Lee, but I absolutely agree with him, and I'm going to call it like I see it. He also says, look, at the end of the day, me and Jamie Dimon only disagree on one thing, which is the direction of inflation. Because Jamie Dimon literally says that the root of all problems that he sees for the rest of 2024 is going to be higher inflation. That higher inflation is going to lead to higher interest rates, which is going to slow down the economy and cause stagflation, right? I'm saying, Tom Lee that is, not me, Tom. Tom Lee is saying, look, guys, that is where we disagree. I think that inflation is on the way down, not on the way up. And because the inflation is on the way down, the Fed will have to cut rates, and it's going to pump the economy, which is going to pump the stock market. So we only disagree on one thing, which is the direction of inflation, not anything else. And that is going to be resolved really quickly. We're going to find out Wednesday, and we're going to find out next month exactly who's right about inflation. And Tom Lee seems to be very confident that his prediction is the more correct one. We won't know until a few months pass by, unless any of you have a DeLorean 1.21 gigawatts or whatever the hell that is. Now, I think that that was a good thing to confront him with what Jamie Dimon said, even though I like to hear Tom Lee talk about his predictions and not talk about Jamie Dimon's predictions, but I think that was a good little segment there. Now, he did say one important thing at the end, which I think was the most important thing of the entire conversation. And he said, look, guys, I believe there's still massive amounts of gasoline in the tank, which is going to propel the market into new highs in 2024 like we haven't ever seen before. Now, the reason he's seeing that happen is because of two elements. Number one, there's $6 trillion of money that was not yet put in play because people were fearing, they thought the market was going to crash, they missed the boat. And those $6 trillion on the sidelines are waiting for any kind of dip. That is why in the past few weeks, every time the market dipped just a little bit, it got filled up immediately because the $6 trillion, and they're going to keep feeding into that dip, not letting the market fall. The other thing he's saying is like saying, look, guys, at the end of the day, it's an inflationary question. If inflation is going to drop, like I think it is, there is no way for the market not to reflect that. Inflation drops, money becomes cheaper, economy gets infused with lots of cash, businesses report great earnings, and then the stock prices fly up. Simple as that. Now, that thesis makes perfect sense to me. One thing I will tell you here is that this whole thing is actually not even about inflation. The whole Jamie Dimon versus Tom Lee is actually about one thing, which is oil prices. If you think about it, everything that happens next is about inflation, right? But everything that is inflation is pretty much oil at this point. Anything that the Fed could have dropped because of 5.25 interest rates have already dropped. The real estate market is in shambles. Nobody's moving anything. The market is very, very tight right now with respect to interest rates. The only thing the Federal Reserve cannot control with their interest rate policy is the global energy prices, mainly crude oil. Now, crude oil, if it moves up, is going to push inflation up despite what the Fed does. If that happens, the Fed is not going to be able to reduce rates, and that's going to push the market down from its Olympus of expectations of 8 rate cuts in the next couple of years. Now, at the end of the day, it's a macroeconomic question. Ask yourself this question. Do you believe oil prices are going to push up in a manner that's going to slow the Fed's pivot or not? That is the whole difference between Jamie Dimon and Tom Lee. Now, I'm going to be honest with you. I'm in the latter camp. I think Tom Lee is 100% right. I think we're going to have a great year in 2024. But at the end of the day, you can't discount what Jamie Dimon warns you about. You can't just ignore the risks and saying, I think it's wrong. You have to prepare and you have to build your portfolio to actually be ready for things to hit the fan. You know what things I'm talking about here. Now, I'm going to tell you in a second how to do that. Now, before I do, one little thing. If you haven't yet, what are you waiting for? Join our Discord, discord.gg/Tom Nash. It is literally free to join. Free to join. Just join. 10,000 people talking about stocks, tips, information, a lot of stuff going on Discord. Join for free. Also, make sure you check out our academy. We're teaching you how to become better investors. The group is actually absolutely doing phenomenal. We've done DCFs, we've done financial modeling, we've done financial statements. We're actually currently talking about PE and different ratios and multiples. We're teaching you tools. It's not about stock tips. If you want to get better at this game, join the academy. And of course, don't forget to claim your 1 week free of Stock MVP. Stock MVP is a platform I built for you guys. It's a platform I built because I couldn't find anything like this in the market. I built it for myself, and now you can use it as well. Try it for a week for free. If you like it, stay on board, and if not, no harm, no foul. Now, about how to prepare. I've made a whole freaking video reacting to what Jamie Dimon said. And in that video, I broke down 5 things I'm doing to prepare for that negative scenario. That video, which is absolutely free to watch. It's not on my Patreon. It's not behind a paywall. It is free to watch. I'm going to put it on the screen right now. Go watch that video. I'll see you there in just a second. And before you do, don't forget to slap that like button, subscribe if you haven't, and most importantly, hit that little bell so you get notified when I upload next. Thank you so much. I'll see you in that video in just a second. Click the video.